Hello and welcome to Car Dealer Live. My name is James Batchelor. Thank you very much for joining us for these live broadcasts on the Car Dealer Magazine YouTube channel. Now, today on the show, I'm delighted to say we've got CAP HPI's Head of Valuations, Derren Martin, on the show. Hello, Derren.
Hi, James.
Thank you very much for joining us. It's always a pleasure to talk to you and to have a chat about used car values. Now, today on the show, we're going to be doing something a little bit different. As opposed to us having a face-to-face chat on here, Darren's going to be taking us through some exclusive insights and some data for us via a PowerPoint presentation. Right, let's put my computer skills to the test, Darren, and see whether I can actually make this work. So far, so good. Here we go. Right, okay, so Darren, over to you, really.
Yeah, so I've got a few charts just to discuss volumes, prices, and what the sort of future holds. So looking at this first slide here, so this is the trade or wholesale volumes that we've received into CAP HPI over the period since the sort of lockdown at the end of March. And the gist of this really is, so what we've done, we've removed any new suppliers that we've had over the last year. So it's a like-for-like comparison with 2019. And you can see there what happened in April, really, with the volumes being so low, fairly well documented with the lockdown that happened. They did start to steadily increase, but as you can see, it was such a small proportion compared to last year. So we didn't move any values during that time. There wasn't enough evidence to do so. Again, fairly well documented that we didn't do it there. We're trying to sort of help the industry, but also we always say we're data driven and we don't make any market movements. So we didn't look back at previous years or move anything then. From the 11th of May, we started to move values again, but only on older cars where there was some data. You can see that the proportion is still low. But then during May, the volumes went up. The 25th of May, there was one less working day, so a bank holiday, but still increases. And then you can see from the 1st of June, the volumes really started to increase as the car dealers reopened and they were back in the market and consumer demand was strong. So they were buying for stock, but also replacing their vehicles as well that they'd sold. And then you can see from the 29th of June, the volumes for 2020 are above where they were a year ago, and that's continued since. So in July to date, we're about 8% up on where the volumes were this time last year, which is a real credit to the industry. That it's all still online, or the vast majority is online, and the auctions have got up to speed, the remarketers have got up to speed. Not just the selling online, but also buyers are prepared to buy online. So the trade buyers are buying that way as well, which is a bit of a sea change in the industry for it to be to that extent.
Yeah.
So yeah, interesting doing that year-on-year comparison.
Yeah, that's a bit of a surprise though, isn't it? That the fact that 2020 volumes are higher currently than 2019.
Yeah, if you'd asked me that in May, I look at where those volumes were in May, I'd have said that's not going to happen. We were actually someone said, oh, well, should you be moving values? You shouldn't be moving values until you're at 80 or 90% of volumes. And I thought that would be a long way away. You can see how quickly that's happened, especially considering there are logistics issues still in the market. So not as bad as they were, but there's still issues getting vehicles into the auctions and getting them out to the auctions in the speed that they were previously. So yeah, it's a real credit to the industry, but also a real sort of show on where demand is with sort of consumers' pent up demand, people buying a car because they don't want to go on public transport, people selling, the sort of dynamics of people selling an expensive used car and going into a cheaper one. And then there's almost the mirror image of that is that people are coming out of a cheaper one and buying a more expensive one because they've saved money. So you've got lots of different dynamics going in there, and people thinking, well, I'm not going to go on holiday this year. I've not been going out much. I've saved a few pounds, and I'm going to buy something that I like. Maybe buy a toy or something like that. And that's why convertibles are still selling well.
Probably a bit of a difficult question to answer, really, but how much of an impact do you think that by auctions purely being online at the moment have made to trade volumes?
I think because they've got up to speed so quickly that really it hasn't made that big a difference. This would probably have been very similar if they were physically still acting how they were. What's happened is the smaller auctions that weren't necessarily so set up to be online have got themselves set up to be online and are doing very well. There is the odd auction that is open physically, but they're being very, very careful about it. Social distancing, hand sanitisation, cars that are being driven through have been sanitised, windows are closed, things like that. Seats that they're not allowed to sit in, so they have to sit sort of 3 apart. So there are some examples of that, but in the main, it's still online. But yeah, the volumes I think are very, very similar to what they would have been if it had been physical.
Yeah. And from what I'm hearing, and I've spoken to a few auction houses this week, they're not going to be opening anytime soon, really, purely because, well, not purely, but one of the main reasons for that is online auctions are proving so well at the moment that why risk opening up for business when business at the moment is going so well. So yeah,
the safety side and the businesses are going well. I think they're making those decisions sort of week on week, month on month, but certainly for August there's no plans for the larger auction houses to reopen physically.
No. Okay, right, should we move on to the next slide then?
Yeah,
there we are.
okay, so just to explain this chart, we have a live product where we're moving values during the month based off the data. We receive daily data sources and we're reviewing the values there. What this shows is what that monthly cutoff is of those live values. So we still have some customers that use our monthly product, which we publish 3 days before the end of the month, and that's an amalgamation of live values during that time. So what you can see there in the orange bars, that was 2019. And you can see there around this time last year, there was some quite large dips in value. So 2.3% in May, which is what happened in April. So after Easter, there was a dip in the market, a bit of a realignment, we called it, where values had been strong before and there was a reluctance to pay those previous high prices to try and maintain margins and keep the retail prices where they were. And then you can see what happened this year. So the red bars, so for February, which is what happened during January, the movement was actually an upward one. And then again in March, for what happened in February, another upward one. And those 2 months, you can see that's rare for that to happen. Then in March, portrayed there by what the April bar of 2.2% down. Most of that was in the last 10 days before lockdown, when people stopped buying cars in the volumes they were. There were people buying cars cheaper as people wanted to get out of cars that they maybe had in stock. So we saw a reduction there. If we hadn't had COVID this year, I'm not sure where values would have gone. We were predicting a strong year all round. You've then got May and June where, as I say, we didn't move values. So May, during April, we didn't move values. So that's the no movement there. And then during May, no movement for June. So you've got a stable market there. From a valuation perspective. And then since we've reopened, so from the 1st of June, when I say we, I mean the industry sort of reopening on the 1st of June, you've had increases, and that's not happened before in both June and July, for July and August books. That's not happened since 2009. That upward movement is generally at a period where values do dip slightly. So it's been very interesting to see, and basically what you've got because of that is you've got high used car values at the moment, but it's based off demand. Supply levels are fairly reasonable. Logistics issues, as I've said before, but demand is causing those values to go up. This is at the 3-year 60,000 mile point. If we were doing it at older values, so 10 years, that would be even more. There'd be even bigger movements up.
Yeah.
Slightly, it would be less at younger ages because those sort of late plate cars aren't in quite so much demand.
I mean, when you announced that this week about the 0.4%, the first rise since 2009, somebody did get in contact with me this week saying, well, that's not a lot. That doesn't equate to much per car. Yeah. That is absolutely right, but it's where the rise actually happens, though, isn't it? One, it's happened at the height of a pandemic, but secondly, you compare it to the last 3 years, and they've had massive drops. So
yeah, there's been drops. So
that's the interesting bit, isn't it? The fact that there's been a rise when normally there would be a drop.
And these are averages as well. So, and it's at 3 years. So we use the 3-year point to measure because that's the sort of the fleet industry norm. But as I say, older cars, we've seen older cars going up 30%, some of them. And these are averages of everything. So things that haven't moved will obviously pull that average down. But there have been cars that have been going up 10, 15%, and I'll show some charts later that sort of show the progression of that. So yeah, it's been very interesting, and for that to happen at the 3-year point, yeah, it is unusual, very, very unusual. So the dynamic really there is that the values have been strong all year, apart from that probably 10-day period before lockdown. So yeah, it's not a lot in pound note terms, but overall it's a very healthy movement.
Yeah, absolutely. And you know, you can't escape the March chart there at all, can you? I mean, that's an extraordinary rise, really, and I can see why you were thinking the year was going to be strong just looking at February and March there.
Yeah, so what happened in January and February, first 2 months of the year, it was a really strong market. It was there were people paying more for cars than previously, and the first quarter can be good, but as you can see by the previous years, it's not always the case. So yeah, it was going very well. In March, it was going along steady as she goes as well until that sort of probably about the 15th, 16th, when everybody started to realise that the world was changing, and that's when people were either trying to get out of cars or people were buying cars quite cheaply. But conversion rates went down around that time.
Yeah, yeah. January and February, they feel like about 10 years ago as well. Don't
they?
They
do. Yeah, yeah.
Right then, should we move on?
Next. Yeah. So this shows the percentage of cap for all of the data that we received. So this takes into account cars in all conditions. So you wouldn't expect it to be at 100% because that would be that every car was in cap clean condition. So this has vehicles that are heavily damaged within this. So you can see what happened there. So early March, tracking along about 95% of cap, which I guess is what you'd probably expect in a reasonable market. When, as I say, you've got cars in below an average condition, NAMA grade sort of 5, 4, 3, depending on the age. When those volumes were low, you think back to that chart with the low volumes, you can see how much prices dipped by. That's when we weren't moving values around that time. If we had moved values, there would have been a hell of a movement down, and we decided we weren't going to do that. The evidence wasn't portraying the full market. Retail, we track retail quite strongly as well, buying the data from various online sources, and they were very steady. So you can't track it in retail at the time, but you could track it in trade, and you can see there from sort of the middle of April, the values started to rise. People started to pay more for cars, and at the time we were tracking it and saying, well, it's still not back up to where we expect it to be. But then you can see as we got into June, it peaks at around 98% of cap on average for that week. So it was the weeks at the bottom, and then you can see that was the peak around the 15th to the 22nd of June. Values, the cap percentage there was above where it was in March. Bearing in mind, we dropped it by 2% into April. So prices were higher than they were before lockdown. We were speaking to lots of dealers, lots of remarketers, all very happy with how things were going. They were selling at pre sort of COVID levels, which was remarkable, really. We didn't expect that to happen. And even when we were speaking to the remarketers, they didn't expect it to happen in June either. They thought there would be a dip. Yeah. Since then, you can see it has been coming down steadily, which makes me sort of think that prices have peaked, but at the moment we're kind of running along the top of that. So it's still a strong market, but it's a peak with a bit of a flat top, I would say. So we're running along okay. Conversion rates remain strong, and the market is healthy. And you can see there the final figure we've put on there for week commencing the 20th of July, which is the last full week of data, is actually above where it was in March. Yeah. So so. It's a very interesting picture that sort of plays out, and obviously that dip initially, it's good that it recovered from there, because you could have expected that maybe that would become the new normal, but it wasn't what happened.
I mean, if you decided to move prices at around late March time, is it fair to say, a difficult question to answer, I know, but is it fair to say if you had moved prices, we wouldn't have reached a 98.3% peak there? It would have been a lot lower.
Well, yeah, I guess, yeah. So, if we'd moved them, the peak would have been higher because the cap figure would have been lower. So people would have been paying more for it, if you see what I mean, but the values would have been lower. But there's always a sort of an argument whether we're a self-fulfilling prophecy with what we do with values, and we can be, because people do sometimes sell to percentage of cap. But if you're selling to the market value, it could then have it would have pushed the cap values back up again. But at the time, it would have caused a lot of concern in the market that cap values were so low. Lots of people buy and sell off cap. They'll quote it and they'll say, I'm not going to pay that because cap is at that. So yeah, it would have caused a big stir in the market, and we 100% made the right decision not to be moving values during that time. To be fair, it wasn't a difficult decision for us to make. There wasn't enough data for us to accurately portray everything. There was some we probably could have moved, some we couldn't, but also we gave the market time to recover before we reflected what was happening.
Yeah. I'm still amazed at that peak at the 15th of June. I mean, it's just absolutely extraordinary, isn't it? I mean, if you'd said that you can expect a peak like that late March, I think most people would have laughed at you, wouldn't they?
No one expected it at all. Anyone who says they expected it is not really telling the truth, because there may be the odd one who said, I think it'll be okay, it'll be reasonable, and prices may be okay, but not really the increase, especially on those older cars. We thought older cars would be stronger than younger cars because they're obviously lower value, but not to the extent they were. And talking about 15-20% increases, no one was expecting that.
Mad. Okay, right, let's move on.
Yeah, so these show. So as I say, we have a live product where we're valuing vehicles. We have a system that points us where to look when values need moving. So we're not moving a vehicle every single day. As you can see on those charts, we move them throughout the month when they require it. So we have a system that tells us when to move, or when it suggests when to move. We then have a team of editors that are reviewing it, and we're very proud of our editors, really, that they are all from the industry. They know what's happening in the market. We have lots of conversations with lots of people in the industry, and we're looking at the data and we're making sense of that data. The value movements there, you can see on that BMW X3. So it started off on the 1st of June at £3,000. It then went up to 3,125, went up steadily during June. There was a slight dip at the end where we moved the values down again. We're getting a lot of evidence on this because it's an older car. There's lots of cars in the market of those ones, but it was popular. It was and it's interesting. It's a diesel vehicle as well, so an older diesel vehicle, still good technology. It's what people were interested in, and it was good value. As you can see there, it did dip slightly at the end of June, and then went up slightly again in July, and then has stayed very, very level. And that's kind of a very good portrayal of the market, that values went up during June and have stayed relatively stable. Possibly not shown very much by that previous chart where it showed a 0.3%, but remember that's at 3 years. Anything older than 3 years was going up in value. So that was a kind of tipping point. Younger cars were going down slightly. Look at the Chiron though, an MPV, not quite so popular. Also, I was quite surprised how expensive that is at 3 years, 60,000 miles as well. So that's an expensive car. So that was coming down in value. MPV's not in as much demand as an SUV. So that actually came down during June, which kind of bucked the trend a little bit. But again, that's now found a level and has stayed level pretty much throughout July. So been investigated, been analysed, but we don't move things for the sake of it. We've moved it, but we've not moved it because it didn't need moving. The evidence was, any evidence that came in showed that the values were fine. Looking at the Golf down in the bottom left-hand corner, that dipped early on. This is a 1-year-old car, so 1-year-old values dipped a little bit early. The franchise dealers weren't out in the market so quickly. They were clearing the stocks from March. They had used and new cars to contend with as well. So these 1-year-old cars, which tends to be sort of their domain more, they dipped initially, but then once they're back in the market, values started to increase again. And you can see there's been a bit of an upward trajectory since then. So 14,850 on the 1st of June, and now worth more than that. And it's unusual for cars to go up in value. That doesn't tend to happen. So that Golf has performed well. And then the bottom right, you've got the Outlander, and we have seen some weakness, not just on Outlander. We're not picking that one out. It's some hybrid technology. It feels as though petrol and diesel has been in demand. Hybrids, people are possibly not prepared to take that leap of faith at the moment. They're more expensive generally than the petrol and hybrids equivalent. so the petrol and diesel equivalents of those. So there's been a bit of a reluctance to pay that, and you can see there that those values have come down. I should have said the orange dotted lines are the monthly figure. So that's where you'd have been if you'd been looking at just at monthly. The black line is the live figure, so you can see how that compares to monthly on there. So yeah, an interesting dynamic on fuel type really, with hybrids being more heavily affected throughout the period, and diesel cars, really interesting, have been very strong and have been selling. Perhaps if you're coming out of a company car, but you're still going to do the miles, you still want a diesel vehicle.
Yeah, and I suppose a lot of this, you're expecting hybrids and plug-in hybrids to do well during lockdown and post-lockdown, because people, anecdotally, people are saying because of cleaner air, people have actually taken time out and thinking, how can we be a little bit kinder to the environment? And so anecdotally, I think there was evidence that people were, prices were going up for these kinds of cars because there was more demand for them. But in actual fact, it would seem as though during the coronavirus, people have returned to what actually feels more comfortable for them, which is they know what they can expect from a diesel and from a petrol engine car, don't they? And especially with the X3 diesel there, people know that the vast majority of people who are buying these types of cars are doing heavy mileages. They may be towing big loads, packed full of kids and stuff, and a diesel engine works well for them. So it's quite an interesting dynamic, really, isn't it?
Yeah, it is. They're reasonably priced and they do a good job for you. And it is a bit of a go with what I know. I'm not sure I'm going to want an electric vehicle or a hybrid at the moment, because I'm not quite sure what the future holds for me with that. Am I going to be able to get it repaired? That type of thing. And obviously you can, but there's still a bit of a reluctance. But then you can't get away from the price of those as well. That there is a price differential, and they can be more expensive. I think going forward, I would have no concerns about hybrids and electric vehicles. Yeah, it's definitely going to be the future. Certainly, electric vehicles, the longer you go, the clean air zones in cities, they've kind of been postponed. But as those come back onto the agenda, there will be more of an acceptance of electric vehicles as the ranges increase and things like that. And obviously, the manufacturers are fully bought into this with the CAFE targets, so they are definitely going to be the future. And we don't think it's an ongoing trend about the drops, but as long as they're slightly more expensive and the pent-up demand is there for petrol and diesels, then it could be for a little while. But in the longer term, I don't think there's too many concerns there.
And of course, another point to remember is that a lot of these electric cars, which have come out in the past year to 18 months, they're over the next 6 months or so to a year, they're going to be coming to the used market, aren't they? And of course, those cars have got bigger batteries. They are classed as more normal cars by a lot of people. So, prices could rise, or they could sort of become a little bit more parallel with petrols and diesels, do you think?
Yeah, I think so. Yeah, there's more of an acceptance of them, as I say. But yeah, there will be more cars coming back into the market. But also, there aren't the incentives for the used buyer. The incentives are there for a new car buyer. But not for the used one. So yeah, it's interesting. There isn't not such an attractive purchase for a used car buyer unless you want to be green at the moment. Whereas for new, there is an incentive there to buy them. So for company car drivers, there's obviously an incentive to go in them with the taxation side of it. But if you're going to buy one used, you just look at the price really. So yeah, there could be a bit more of a leveling off there. It very much depend on the market. The electric vehicle segment is obviously, you've got a Tesla at one end of it, and then you've got vehicles like the Leaf at the other end of it. So there's a completely different buyer for those sorts of vehicles.
Yeah. Okay, very interesting indeed. Right, let's just move on now to this one.
Yeah, so just to explain this chart, so this is starting from a 0 point last August's value compared to where we are with this August's value, because we've cut off for monthly values now for August book. I still call it the book, even though there isn't physically a book. It's all online now. But you can see there. So we would normally expect what you're measuring here is a 3-year-old vehicle. And the equivalent 3-year-old vehicle at both points in time. And you can see there that you've got the prices have gone up on cars, and what you would normally expect is that values would deflate as cars, because it's measuring the same type of vehicle. So, say an X3, again, 3-year-old X3 to a 3-year-old X3. There's been new cars coming into the market that are more popular than that vehicle because it's not the new kid on the block anymore. So prices do generally deflate for those models, and that's how we measure exactly the same set of vehicles at the start and at the end. So we would probably expect around a 3 to 5% drop here on average. And you can see there by the dotted red line, values are 6% up on where they were a year ago. City cars, which is the top line there, the blue one, they're nearly 15% up. Super minis are nearly 12% up. If you think back to the chart that showed the weakness last year in those orange bars for 2019 in the summer, since then, we've had a strongish end to last year. We've then had a strong start to this year. You then had a bit of a dip in going into April, which you can see on that chart. But then we had 2 months of no movement, where you'd normally expect values to come down. Then we've reopened again with our car showrooms reopening, and it's been really strong, and values have gone up. So when you put all those into play, it's been a really strong. Values are really high. You can't get away from looking at history. What goes up usually comes down. So it's not necessarily sustainable, unfortunately, for prices to be at these levels.
Yeah. And one of the surprises on there, well, it's not a surprise because we've been talking about it a lot here at Car Dealer, but it's the sports category, isn't it? Because that's had quite a big sort of, I don't know whether you could say it's an uplift, but the prices have got better, haven't they? There.
Yeah, over the last 2 months, you can see that that's really stark on there, actually, isn't it? Yeah, that they've gone up, and that's the people going out and buying a toy, or people upgrading to a car that they really want. As I said earlier, if you've not been spending too much money, and you're not going on holiday, then yeah, go out and buy the toy. And I haven't put convertibles on here, actually. I've just gone for the mainstream sectors, but convertibles, they've been selling really well recently. So certainly older ones, you look at a £2,000 or £3,000 convertible, lovely little toy sitting on your driveway. Why not go out and invest in something like that? And if it makes you smile every time you walk out of your front door, then great.
Yeah. And that is a classic example of what you've just said about, what goes up must come down. We know that sports, and particular convertibles, that trend is just here for the moment. In the next couple of months, that's probably going to ease off, isn't it?
Yeah, I think the seasonality of those, they would convertibles certainly would be dropping by now in value. They tend to, in the trade anyway, that they peak around May, June. The trade don't necessarily want to buy one in July because you're going to be getting into August before you might sell it if you're looking at, and then you're starting to get beyond the summer. But I think lockdown has sort of pushed that seasonality back. So values are still strong at the moment. So yeah, I think, but it's not going to last forever. And I guess the concern is they're going to be coming from a slightly higher start point as well. So they could well drop off a little bit starker than they would have done previously. But yeah, they do tend to drop away from this time onwards. But it might stay strong for a little while yet, because there's still the demand out there at the moment.
Yeah, very interesting indeed. Right, last slide.
Yeah, so just to sort of talk about what happens next, really. So, as I say, we're at the peak. We feel we're running along the top, so it's a flat peak. But you can't get away from an economic impact. Certainly in the short term, there's the end to the furlough period, or from August, there's you've got to contribute towards furlough. There is going to be higher unemployment. I think the latest figures are talking about 11% unemployment. We're seeing it every day, unfortunately, within our industry of some pressure on people, on sort of people's wallets. So I'm just going to move that because the sun's shining on the camera. I'm not sure if people can see that. So there is going to be an economic impact as we move forward. Lower consumer confidence. People are going to potentially still want to buy a used car, but are they going to be prepared to pay more or the current prices for a used car? In an economic downturn, people do tend to gravitate towards used cars rather than new, although PCPs may sort of help out with that to a certain extent. But yeah, you've got sort of prices that are high. I think that late plate area, if you're spending, or if you look at late plate prices on a mainstream vehicle, £20,000, £25,000, that's a lot of money. I think the cheaper end, 10, 12 grand or below that, those cars may still be more popular. But I think there's going to be a reluctance to make a big ticket purchase, and there's going to be a reluctance to pay prices out there in the used car market. So there could well be a dip that we think may come sort of September, October time. Q4 can also be the weakest month of the year for values. If you look back over a number of years, that can be the case. Got to be very careful. I don't want to talk the market down. We just think it's not really sustainable for these high prices to continue. But that's not to say there's still a good used car market out there. People are still going to want to buy and sell used cars, just maybe not at those high prices. You've also coming back. You've got higher volume of used cars from prior years. So those cars are still going to come back into the market. You've got extensions that have been made to leasing and Motability cars that are going to come back as well. You've got logistics getting back up to speed at the same time. So you could have higher supply as demand sort of dips off, or people are not willing to pay such high prices. But you could also temper some of that with the fact that the rental companies are out there selling cars now that they may have sold later in the year previously, because their rental demand isn't there. But and they're making hay while the sun shines. How many times have we heard that recently? But the cars are selling well. Why not sell those cars now rather than hang on to them when they're not being utilised? So that might lower the volume slightly on late plates back in the back end of the year. Looking at the right hand side of that chart, though, longer term, hopefully an economic recovery over, not in the short term, but over the next 2 or 3 years. Unemployment to lower. And consumer confidence to come back. We're talking probably back end of next year for a lot of these things, maybe even beyond that as well. And then obviously you've got reduced volume from this year's registrations and for next year's registrations. Both years are going to be lower. I think the SMMT are saying 1.6 million in a market that would have maybe been 2.2, 2.3 million. So that is going to help in the future. So I think the good news from this is if you're writing PCP business, for 3 years' time, we actually predict values to be pretty much where we would have expected them to be anyway. But we do think there will be a dip in the meantime, and then they'll come back. So longer term, we're hopeful that it will be healthy. But in the short term, I think there could be some challenges, sort of Q4 and next year.
Super, fantastic. Can we just also, one thing we haven't covered there is just LCV values. Now, of course, that was cars, LCVs. From what I'm hearing as well, it's also a very strong picture.
It's unbelievably strong. LCVs, there's not so many in the market because of the rental companies. They are doing okay with car rental, with van rental. Obviously, they're needed for the Amazons of this world to do the home deliveries. We're hearing of companies that had a small number of vans have kind of doubled the size of their fleets and things like that, and they're renting vans as well. So the demand is there to buy a van, and there's not a huge amount of supply. So van values, we've put them up. Depends on the size of the van, but yeah, we've put them up this month. Going into August. The caveat on that is minibuses. They've not been doing so well. They've been under pressure. They don't really work with social distancing, so they have been under pressure. But apart from that, the panel vans have been doing really, really well. And I would expect that market to stay strong for a while yet, because they will stay in demand. And as you get into Q4 for vans, that can be a strong month as you build up to Christmas. And again, the increase in deliveries, that can be strong. So yeah, positivity on the LCV side, and it's kind of slightly different for the forecasts for LCVs. We actually think they will go up in the short term. 1 year in the future, values could be higher than they were expected to be, but then in 3 years we'll probably return back to more normal again. So you could have cars and vans that do different things in the meantime, but in 3 to 4 years' time, they're back to where you would have expected them to be.
And do the same things apply in like the used car market, where it's cheaper older vans that are the most popular?
To a certain extent, yeah, because newer ones are obviously more expensive, and people are just looking for something that does a job for them. Than older ones have been doing well, but they can be more heavily damaged. So there's a little bit more of a caveat there. But yeah, it's almost across the board really that vans have been doing well.
Fascinating. Thank you so much, Derren. We're going to have to leave it there, but that was some fascinating insight into the market there. Thank you very much indeed.
Okay, pleasure.
So if you want to get involved in a car dealer live just like this one, then please do email me, james.batchelor@blackballmedia.co.uk, or James Baggett. He's available at james@blackballmedia.co.uk. That's it for this week. Our next show is on Monday. Until then, have a lovely weekend. Thank you very much indeed, and bye-bye.